Hello, everyone. Paul Feldman. I'm really excited about this opportunity. I'm here with the CEO, the chairman of the board of Pan American Life Insurance Company, Jose Suquet. It's great to meet you and great to have you here.
Thank you for having me, Paul.
So, one of the things that really impresses me about you is that you've gone from an agency in the field to CEO of an insurance company, and you've been there one of the longest tenures I've seen. Like 20 years. Am I right?
20 years as CEO of Pan American, yes.
Yes. So tell us a little bit about how you got into the business and how you went from, an agent working in different companies, marketing organizations, distribution to being CEO.
Sure. Well, I started my career. I had just graduated from college at Fordham University in New York, and I still remember going really excited. I was already married, by the way, and I got married at a young age at 20, and I went home. We lived in Brooklyn, New York, in Park Slope, Brooklyn, and I went home. My mother was there and my wife was there, and I all excited that I had gotten a job offer. And they said, "Well, what is it?" And I said, "Well, I'm going to become a life insurance agent." And they immediately, kind of sat back and were a little trepidatious, to say the least. And my mother just started clutching her heart a little bit, and she said, "Well, what kind of salary are you going to have?" And they said, "Well, they had two different plans. One was a salary and a small commission, and but then they had a really higher commission and a bonus on top of that, but no salary." And I decided to just forego the salary and just go with the commission and bonus. And there I thought I had lost my mother. And my wife was also a bit scared, but it's the best decision I could have ever made. That was in 1979,
Wow.
July 1 of 79. And I just couldn't have had a more dream-like career. And I owe it all to the roots that I have of being an agent first. And I kept selling, and I became a unit manager for Equitable back then. And then 4 years later, 6 years later, in 1985, was given an opportunity to move down to Miami to take over an agency. And in late 84, early 85, took over a consolidated agency. And we had a great run there. We became one of the largest agencies in the industry in the span of about 8 years. I ended up with about 300 agents.
Wow.
We were doing about 25 million of new life insurance premium every year. We sold annuities, of course, and through the broker dealer, mutual funds and investment products. And I had 13 unit managers. I had an estate planning attorney on staff, a pension attorney on staff, a securities products coordinator, a marketing director, and we
Wow,
just
that's
had
that's that's
it,
impressive
it was it,
infrastructure.
it
Yeah.
was just a tremendous run. And at that time, Jim Benson, who's a legendary figure in the insurance industry, had come to Equitable, and had come through a storied history at M Financial. And we got to know each other, and he asked me to come up to the home office at Equitable. And at that time, AXA had taken a minority stake at Equitable. We went public before I got up there, and we had a tremendous run. So I became head of the agency system at Equitable AXA, and then took over as all head of distribution. So I was responsible for all of the agency system, all of the third-party distribution, such as regular brokerage, as well as banks, wirehouses, broker-dealers. And we were running a big shop at the time, and took it from about 4 or 5 billion of sales to about 13 billion of sales in about a 7, 8 year period.
Wow. That's
AXA, so this would have been 2000, 2001. AXA took us out as a public company. We became a private United States subsidiary of AXA. And I decided at that point that it was good to explore other opportunities. And so I left AXA, took some time, and then was recruited at that time by the largest life broker at the time to run 3 different businesses for them. And that was Bisis at the time, which was taken over by Crump, and then Truist brought them, and then they recently Truist just sold them. So I had experience there with brokerage, and then decided that I wanted to go back into the carrier world, and took some time there. And then I really did not, I got an opportunity. Actually, was such a very large company. I mean, at that time, I had all distribution, broker dealer, life, annuities. We had
And they
six,
have a multinational arm. Were you involved with that as well?
only on the corporate sense, but
Okay.
not really. No, it was all US focused. And we had a tremendous run there. At that time, we had 60 some odd billion in just variable annuities assets under management. So Equitable AXA, they still today are a leader in VA and indexed annuity business. And so we did that. And AXA was also, we were also very big in variable life business. Equitable during the late 80s, early 90s was having some difficult times financially. And it was very difficult to sell general account products because of the difficulty financially that Equitable was dealing. So we developed variable life products, and we really became the leader in
Hmm.
variable products at the time. So I took some time off. I hung up a consulting shingle, and I did a couple of consulting projects for big name firms that you would know. And then had an opportunity and was offered by a couple of the major Northeastern insurers opportunities to run distribution or run a business or two, but I really did not want to go back to the big carriers, and I really wanted to run my own show. And I just held out, and the Pan American search firm called me, and I felt it was an ideal fit. Many people in the industry that knew of me and knew me were surprised that I would go to such a small company at the time. And but it's been a ride that has far exceeded my personal and professional expectations. It was not an agent centric company, and I remember kind of changing that immediately. And I'm very optimistic that even when I'm not here, which I plan to be here for quite some time still, but I made it very clear that nothing happens in an insurance company until an app comes in the door. So you don't start managing your assets that you manage don't increase anymore until apps start coming in the door. You don't have underwriters. You don't have set anything, and you should be and that I had to instill that you should be ringing celebratory bells when the
Yeah.
business comes in the door. And so that's a real shift in culture at many carriers.
Yeah,
And
because I haven't heard another carrier say it like that. So,
yeah, yeah. And it was like, man, some carriers have the thing, this would be a really great place if it wasn't for these pesky agents. And I felt that, I mean, I carried a rate book
yeah.
under my arm, so I was the complete opposite of it. So I think that has permeated and will continue to permeate for at least a generation or two after I'm gone.
So, being in the industry, what kind of changes are you seeing around the industry? You've been in it for a while and
Sure.
worn many, many hats.
Yes, yes. So this will be my 46th year on July 1st in the industry. I think over the last 20 years, especially since I've been the CEO, and some of it from the 20 years, others the last 10 or so. Clearly, the emergence of private equity in the business at both the carrier level and the distribution level. And I think that's healthy overall. I would tell you that at the carrier level, the private equity folks are in it for an asset play and to manage assets. And I think that they're experts at that. And for the most part, a number of the carriers that have gone down this path have reduced their distribution or sold their distribution or
Hmm.
just closed it up. And that's fine. That's understandable. On the distribution side, the private equity firms have been the beneficiaries of this phenomena of carriers exiting distribution. And so whether it's the simplicities, the integrities, the alliance, we happen to be on their shelf space. Just about most of the major distribution organizations in the industry, primarily in the life insurance space. We also in the U.S. do a group of fixed indemnity products and stop loss. So we're on the shelf space on some of that as well. So the emergence of private equity has really gone. The product shift has gone from variable and fixed products, which we're still in the whole life, to indexed. Lots of index, whether it's variable annuities or indexed universal life. So that's been a change over the last 20 years, all for the good of the industry. I think another big 800-pound gorilla are the increased pace and associated cost of regulatory and IT changes, and in particular, information security and data breaches. That it has taken a hold, and you've really got to build defenses around your data and around your systems. You've got to educate your employees, your executives. You've got to provide tools for education and protection to your distributors because everyone is at risk here
Hmm.
from a cybersecurity point of view. The regulatory environment continues to just increase in scope and severity. And this is from someone that we're involved in 22 different countries, jurisdictions outside of the US, in addition to 49 states in the United States. We're very, very involved, and we have a fairly large regulatory infrastructure to make sure that we're complying and that we're net, arm in arm with our regulatory partners. So we don't fight the regulation. We try and stay ahead of it and make it try and make it as easy to do business with our distributors as much as possible. I think some companies have tried to get into markets that they probably shouldn't be, or they don't have the necessary expertise for it. We have stayed true to our values and purpose, which is life, health, and accident. We just are not going to bite and go after the shiny new object. We on the product front, we have really stay focused on whole life, participating whole life through our absorption of mutual trust 10 years ago.
Mhm.
And that which has gone over well. We'll be celebrating our 10th anniversary. We have numerous choices for our agents and brokers. And then we have recently introduced Index Universal Life product family that focuses on the simplicity of the Index UL. There's Index ULs that you almost have to be a CFA to understand
Yes.
the how complex they are. And we have focused more on the simplicity of our product set. So I think that those are the major changes. I think on the distribution front, continuing to have realize that distributors, you have to earn their business through a competitive product set, but also through superior service and an understanding of what they do. And unfortunately, I may be either a dying breed or a dinosaur because I don't think there's too many people like me that are running insurance companies that have carried a rate book. And I'll give credit to those that are were wholesalers and VP of sales, but never were an agent, because if you're a VP of sales, you kind of been out in the field and are part of the boots on the ground. And there are a couple that have been leading the company with distribution experience, but more and more, even those are rare to find. So my whole mission is to make sure that that value of nothing happens until an app comes in the door,
Mhm.
that permeates for another couple of generations in our company at least.
I just think that is a really strong philosophy. I mean, it's your agents first. They're the ones writing your policies, and
Absolutely.
distributors first because they're helping getting
Absolutely.
it out there.
Yeah. And another just nuance about us, and we do not go direct to the consumer. We believe in all of our businesses and our primary customer is the distributor. Even in our stop loss business, where carriers have direct sales forces to the groups, we do not. We have a network of MGUs that do this for us. So we do not go direct. We believe that our primary customer is the agent, the broker, the IMO, and that is our starting point. And though the service that we have to focus on first is through that intermediary.
Awesome. So you guys have some niches in the industry. Tell us a little bit about the niches and the niche markets that you guys serve, because not a lot of companies do that either.
That's right. Thank you, Paul. So when I first got here, the chairman at that time that recruited me said, all of our all of the challenges you're facing and the heavy competition are out of New Orleans and the United States. All of your opportunities are international. So I did focus the first couple of years, the first few years on Latin America And in hindsight, it was the absolute best move. So we had a variable life product that I shut down. I shut down our disability business. I did not want to compete uh, with an independent distribution with the big boys, as I call them National Life or Pac Life, and all the CEOs are good friends of mine. And needless to say, the big mutual companies. So we didn't want to start off competing with that. So we went where no man has dared to go, as I used to say in Star Trek. We go where no man has gone before, and it proved very good for us. Then, as things developed, we said, well, how do we expand in the United States? And we little by little we created niches, but we also said we need some scale, and we converted the company to a mutual holding company, and we said, well, what's the universe of potential merger partners that are out there? And mutual trust came up, and we hit it off with them. They were looking for a potential merger partner, and that got us into the middle market whole life business. So we've been doing that very successfully for 10 years. We have a terrific distribution head of our U.S. life business, Luke Cosme, who does a great job. We also have a niche in our high net worth foreign national business. So a lot of wealthy foreigners that have a nexus to the United States are looking for a high quality company that understands that market and is not afraid of the underwriting risk, the international travel, and we do that quite well. And so we are experts in that area. And I think that maybe it's my upbringing. I was born in Cuba and have been here since I'm 2 years old. And even though we're in 22 different countries, I still think this is the greatest country on earth.
So, what do you see as your company's biggest opportunity in the next 5 years?
I really feel that from the next 5 years, we really want to continue to explore the Hispanic market for us. Um, we're also very unique in that we have, through our footprint in Latin America, we have Hispanics that, for the most part, their parents or grandparents came from one of the countries that we're currently do business in. And we're not a fly by night in these countries. We have been in Panama 110 years. We've been in Central America 80, 90 years, 70 years. And Mexico, talk about cross-border, we're looking for cross-border opportunities in trade. Even though there's talk of the tariffs and all that, there's still significant trade going on between Mexico and the United States. So we think that we're very uniquely positioned in terms of the life, health, and accident and travel accident products to capture cross-border type of opportunities. And that's where I see the niche. We think that the emergence of other parts of the world and their interest in the United States will continue to feed this high net worth foreign national business. So we wanna continue to do that. And then we're looking at an area. We've got about 3 or 4 different work streams that will look at what I call the S curve. In a typical, it's actually a management term, a sigmoid curve. That a typical S, you go like this, and at the top, there's a tendency, once you're getting to the top, that you'll start going back down again. Well, we're at the top. Uh, we had our best year ever in 24. We're off and running again in 25. So we're looking at how do we superimpose another S on top of the one that we're doing. And we've got things focusing on producer strategies. What do we do to make it easier to do business with us? How do we continue to target these large IMOs? And how do we build the relationship with the large IMOs? Um, the U.S. Hispanic and cross-border opportunity that I talk about. How do we focus on operational efficiency and the customer experience, the customer being the broker, to make it easier to do business with us? So all of that, we're all gelling around this summer to develop specific initiatives and make sure that we're in shape to start introducing many of these new concepts and new ideas, or reinforcing what we're already doing, so that we're funding and allocating the proper resources to them for the next 5 years.
I think one of the products that you recently launched or launching in your Index UL is pretty exciting. Is that going to be available through normal distribution?
Yes, that is available as we speak in the United States. We have it available in our high net worth foreign market as well. So it is available. It's taking hold. We were a focused, fixed whole life, participating whole life company through Mutual Trust, which is now part of Pan American. We merged Mutual Trust with
I
Pan
know, and
American.
people, like whole life is they don't think it's exciting, but it is. It's great product. It's
It
something
it
you could
it
rely on.
clearly
So, what are some tools and resources that you guys offer to agents to grow their practices?
Well, we have in the US, we have a number of selling systems, whether it's your family bank, college funding, Leap, I could name a couple of others, but we have a number of selling systems that many of them bring to us. So it's not like we're inventing these selling system. We have a very robust sales support uh, of regional VPs and account managers with that culture that nothing happens until an app comes in the door, and they display that eagerness and that attention that we really want your business, and then we focus a lot on the service element, from the underwriting piece, from quote to claim, as I call it.
Well, I really enjoyed this conversation. Thank you so much.
And thank you for your interest in our
Absolutely.
our great company.